Hi there, good morning. You're watching Market Cafe on ET now. It's a bright Monday morning. It's a new fresh week of trade. I'm Snehisha and with me is Shreyansi Singh. This is a show where we'll be taking you through everything that has happened post-market hours on Friday, over the course of the week back home as well as globally. And on that note, let's kickstart the show, Shreyansi. Lots has been happening on Wall Street lately.
Well, absolutely. Lots has been happening on Wall Street. Firstly, when you take a look at the move coming in on a weekly basis, you did have at the end of Thursday and Friday, you did have the Wall Street ending the week in the red. So when you take a look at the Dow, that finished down 2.5% for its worst weekly performance since October. So not a good week coming in for all three indices. In fact, when you take a look at the S&P 500, that was down 1.7% thereabout, and Nasdaq Composite as well, down 2.5% for the week. Now, that's the kind of the weekly move that you have coming in. But the week ahead, of course, includes key readings on the corporate earnings and the economy. So in terms of earnings reports, you do have Home Depot. That is something that we're going to be looking out for a better sense of how US consumers are faring. And you do have Nvidia's report. That one's going to be even more impactful, as you do have the artificial intelligence linked chip maker that is still one of the biggest stocks by market cap. So definitely something to watch out for this week. And this is, of course, Nvidia's first earnings report since the emergence of the DeepSeek large language model. So that is also something that we're watching out for on the macroeconomic front. You do have January reading of the Personal Consumption Expenditures Index, which is the Federal Reserve's preferred gauge of inflation as well. On your screens, you can see the macro check as well at this point. When you take a look at the business activity for the month of February, that was at a 17-month low, home builder sentiment at a 5-month low, and even the one-year inflation estimate at a 15-month high. In fact, the slide for stocks last week came amid renewed concerns about economic growth in the US, so definitely something that we're looking at by the way of factors.
Absolutely, big cuts coming in on Wall Street over the course of the trading session on Friday. That was not holding up well. On that note, let's also take a look at what crude prices have done. Oil prices have settled down more than $2 a barrel on Friday. Some cuts being seen on that front as well, posting a weekly decline as investors grappled with a fading Middle East risk premium alongside uncertainty about a potential peace deal in Ukraine. Brent futures settled down $2 or 2.7% to 74.43, so we're sub that 75 mark, while US West Texas Intermediate Crude, that's your WTI, settled down another $2 or almost 3% to 70.4. If you take a look at what these indices have done over the course of the week, Brent has settled 0.4% lower for the week, while US crude futures have posted a 0.5% weekly loss. Investors also continue to weigh an uptick in US crude oil stockpiles reported on Thursday as seasonal maintenance at refineries led to lower processing. This is what the EIA has said. And US energy firms this week added oil and natural gas rigs for the fourth week in a row to the highest level since June, energy services firm Baker Hughes has said in a report on Friday. The oil and gas rig count, which is an early indicator of the future output, rose by 4 to 592 in the week ending February 21. Traders' focus was also on oil supply disruption, however, capping some losses on that side. You've also had the entire Ukrainian drone attack for Russia, for which it exports its crude from Kazakhstan. So that was a big attack coming in. That has also helped support crude prices over the course of the week. On the flip side, on the demand front, JP Morgan analysts expect cold weather in the US and a post-holiday increase to industrial activity in China to contribute more demand in the coming weeks. So prices could be seen coming up. We have a couple of factors that are pointing to that. Also, today is going to be an important meeting in Kyiv, which is in Ukraine. You have Zelensky, who's going to be hosting leaders of 13 nations coming in. Also, the conflict that's escalated with Donald Trump over the course of the weekend could see some retaliatory action coming in, and who knows what that could pan out to be like for these oil prices. But over the course of the week, we've seen cuts coming in on Friday as well as the week that went by.
Well, absolutely, Snehi. Lots of factors to watch out for as far as oil is concerned, but let's also get a quick check going on the events that you should be keeping on your radar. Then you do have the Delhi Assembly session that begins, so keep an eye on that as well. From the Eurozone, of course, there's the CPI data set that we're looking out for. It's the last day to buy shares to be eligible for interim dividend. When it comes to SBI cards, so that's also one counter that we're looking out for. Other than that, it's the lock-in period that is ending as far as NTPC Green is concerned. So even that counter is going to remain in focus, and it's the 3-year anniversary of the Russia-Ukraine war, marks the completion of 3 years as far as that war is concerned. Of course, there's an important meeting lined up ahead. So that is also something that we're looking out for as far as that particular geopolitical front is concerned.
Absolutely, lots to watch out for. And well, you talk about what's happened over the course of the weekend. This weekend has been anything but boring. Lots of news flow, lots of events taking place. Let's start by talking about Warren Buffett's latest shareholder letter, because that reaffirms his faith in stocks over cash, even as Berkshire Hathaway's cash reserves soared to $334 billion. He praised Greg Abel as his successor, calling him ready to lead, and Berkshire reported over $47 billion in operating earnings for 2024, driven by gains in investment income and a strong insurance business, despite over half of its 189 companies seeing an earnings drop. Buffett also revealed a shift in portfolio strategy, reducing stakes in Apple and banks while increasing investment in Constellation Brands, SiriusXM and Occidental Petroleum. With limited buying opportunities in the US, one key takeaway is that Berkshire Hathaway is looking for opportunities overseas. The company has been increasing investments in the likes of Japanese companies Itochu, Marubeni, Mitsubishi, Mitsui, as well as Sumitomo.
Rather than shifting focus to US President Donald Trump's comments, who's revealed that the Apple chief Tim Cook is reportedly looking to shift manufacturing from Mexico to the United States. However, clarification from the tech giant on the same is awaited. As per reports, Trump cited a recent meeting with Cook at the White House to say that the company has in fact stopped 2 plants in Mexico and will build products in the US. Now, the US president also reiterated Apple's stance of investing hundreds of millions of dollars in the country as well.
Okay, meanwhile, Trump continues to generate headlines. The US president has also, in fact, signed a memorandum to impose tariffs on countries that levy digital service taxes on US technology companies. As per White House officials, Trump is directing the administration to consider responsive tariffs to combat the levy of digital services taxes, fines, practices that have eaten into the profitability of American firms. The memo directs trade representatives to renew the tax investigations that were initiated during Trump's first term. Hi there, welcome back. You're still watching Market Cafe on ET Now. Let's take stock of how the Asian markets have opened up this morning, and it's looking rather mixed. In fact, it's not looking very good for these markets right now, given the way US is closed on Friday after Wall Street logged its worst session of the year last Friday on lackluster US economic data that pointed to a slowing economy and sticky inflation. Now, on the back of that, Asian markets were the first to open up this morning, of course, and Australia's ASX 200 has extended losses to a 6th straight session, opening 0.8% lower, but has recouped those losses because it's very flat right now, barely in the negative. So it seems like ASX could flip over to the green anytime soon. On the flip side, if you take a look at South Korea, Kospi has started the day 0.7% lower, continues to be there, 0.6% cut coming in, not much happening on that front. Japanese markets are closed for a public holiday today, so the Nikkei rate you're seeing is from Friday, 0.2% uptick coming on that front. Let's also take a look at what Hang Seng and Shanghai are up to this morning. Hang Seng holding up firmly, a 0.6% uptick coming in on that front, and Shanghai also not doing all that bad, rather flat but in the green nonetheless. So it's rather flattish to mixed moves coming in, with the Hang Seng being the exception when it comes to the Asian markets. Let's shift focus back home. Remember, we've just closed up that 22,800 mark. That's proving to be quite the resistance for the Nifty on the upside. 22,795 is where we've closed, to be precise, on Friday. Implied open at 22,684, indicating an exact 100-point cut coming in for our markets to open this morning. So we're looking at a gap down open of 100 points, 138 points on the futures, to be precise, a 0.6% cut from where we closed on Friday. So not looking very good for us. Asian markets have been shaky. Wall Street has been really bad on Friday. So we can only imagine what our market is going to be like today. But well, yes, we're implied to open on the lower side today.
Well, absolutely, and let's really see how that pans out for us. But moving on then, Adani Group has released its tax transparency reports for financial year 25, revealing a total tax contribution of more than 58,000 crores, now up from 46,000 crores last year as well. The reports, in fact, covering 7 listed entities, reflect Adani's commitment to transparency and governance. Chairman Gautam Adani emphasized tax transparency as a key pillar of trust and responsible corporate conduct. The group, in fact, aims to set new benchmarks when it comes to corporate accountability by also voluntarily disclosing its global tax contributions.
Well, it's going to be a tumultuous session today, is at least what the GIFT Nifty is implying for us. Here's everybody who's going to be joining us on the market today, starting at 9:20. On this edition of Market Makers, we're going to be joined by Milind Karmarkar, the Director and Fund Manager at Dalal & Broacha Portfolio Manager. So he's going to be joining us. At 9:40, let's shift focus and talk about the manufacturing push. Atul Lal, the Vice Chairman and MD of Dixon Technologies, is going to be joining us on everything that's been going around their PLI scheme lately as well. In terms of growth triggers, we are going to be joined by Amit Kumar Sinha, the MD and CEO of Mahindra Life Spaces at 9:50 to talk about their recent redevelopment foray into South Mumbai. And also the parent putting more money into the company, so that's also looking good for them. At 10 a.m. then we'll be joined by Mohit Khanna, the CFP Fund Manager at Purnarth Investment Advisors, to understand how to navigate the kind of volatility that we have been seeing so far and is penciled in for us to continue for some time going ahead as well. So it's going to be important conversations, very important market guests and managements joining us. Interesting day of trade is also penciled in for us today. Stay tuned to our channel all throughout the course of the trading day.
Welcome back. Thank you so much for staying tuned in. Well, time now to get you some more news and updates. In fact, let's take a closer look at Federal Bank, because Federal Bank's new CEO KVS Manian unveiled the breakthrough phase strategy under Federal 4.0, aiming to push the bank closer to India's top private lenders. In fact, the 12th theme plan focuses on NIM improvement, fee growth, branch expansion, as well as brand transformation as well. Gaurav is standing by with the key takeaways. Gaurav.
Help for FY28, as highlighted by Mr. Manian, who is the new CEO of the bank. What he has highlighted is as the breakthrough phase strategy for the bank. What he has said is that this will take the bank an inch closer to the top banks where the Federal has been always wanted to go. At the same time, what they have called is that this the strategy is called as Federal 4.0, where they have 12 theme strategies which will place itself in the best 3 or next 3 banks. There are some key themes that we have highlighted is that NIMS improvement, product portfolio expansion, fee enhancement, branch expansion. So these are a few categories where they will be focusing, and at the same time with these focus on these categories, they will be targeting around 1.4 to 2.2% of ROA by FY28, 13 to 16% of ROE by FY28, and at the same time NIMS will also be somewhere in the range of 3.5%. Now if you look at the numbers, it is actually quite higher than what we have seen for Federal Bank for this quarter at least, and at the same time for ROAs they have also highlighted a few levers. So first what they will do is that they will be focusing on actually reducing the cost of deposit, and they are targeting to do it by increasing the CA, which is current account portion of their portfolio. Currently it is at around 6%, which they want to increase to around 10%. Other than that, they will be also reshaping the advance mix. They will be focusing more on medium yield and high yield segments. That is the reason why we may see some increase in ROA. At the same time, they are also expanding their product portfolio. Fee enhancement is also something that is on the pages, and at the same time cost efficiency is also something that management will be highlighting on. Other than that, they are also targeting around 400 to 500 branches expanded by FY28. So there are a very strong path for FY28 from Federal Bank, which has been highlighted. Lastly, when we look at key focus areas from here on, wealth management, non-resident accounts, corporate banking and SME bank of choice is something which will be a key thing to focus on from Federal Bank. So definitely a path that they have highlighted for FY28, and on back of this, Federal Bank will definitely in focus today.
Hey Gaurav, thanks so much for taking us through that. Federal Bank is going to be one stock to watch out for on the back of the lofty goals that they've set for themselves in the Analyst Day over the weekend. But let's shift focus and talk about power, because Power Secretary Pankaj Agarwal is discussing issues related to power purchase agreements with states, and has also said that states must ensure an adequate power supply to consumers. My colleague Prakash Priyadarshi filed this report earlier. Let's go across and take a look.
Yeah, the Power Ministry is very much aware about the fact that states are avoiding long-term power purchase agreements with the power generation companies, and it's a matter of concern. In fact, the power generating companies have approached government to find a solution. In fact, Power Ministry did inform that they are now under discussion with the state governments to resolve this issue. In fact, various aspects are being considered. In fact, they have held meeting with the northern states. This issue was widely discussed, and it has emerged that some states like Uttar Pradesh and Madhya Pradesh are signing power purchase agreements with the power generating companies. But various states such as Gujarat and Rajasthan are making their own arrangements. They are coming out with their own bids and avoiding approaching, SECI. So it's a major concern before the government at this point of time, as the states are avoiding long-term power purchase agreements. Along with that, the power secretary has also informed that they are planning to write to the states to make sufficient arrangement, in fact ensure power adequacy to maintain sufficient availability of power in the market. So various efforts are being made. The issue is very much under consideration of the government, and the government is trying to resolve this issue as soon as possible.
All right, thanks Prakash for getting us that update. Moving on then, AMFI has launched 3 new initiatives for the mutual fund industry, including the much talked about 250 rupee micro SIP, the Jeevan Tarun plan, as well as the Mitra platform. In fact, Anurag Shah then caught up with the chairman Navneet Munot to understand more about these schemes. Let's go across and listen into a slice of that conversation.
So we have 5.3 crore unique investors. This number needs to multiply over the next several years, and what we have tried to do today is to reduce the ticket size of the per month SIP, bringing it down to 250 rupees, where every fund house will bring down the size of the minimum ticket size of the SIP in certain funds to 250. If you look at 250 rupees, that's almost 8 rupees per day. It makes it like less than what you can buy a cup of tea or maybe a vada pav in Mumbai. So we are really making it very accessible, very affordable, very convenient, very simple, and then people can participate in the growth story of India. So regardless of your economic strata, regardless of your background, you can also participate in capital markets of India. That's the initiative under the guidance of SEBI AMFI has done.
So you spoke about the 250 rupees SIP. Do you think it will be viable for AMCs to continue?
So it has been structured in a manner with the guidance of SEBI. We have worked with all the ecosystem partners, whether it's the KRAs, whether it's depositories, whether it's exchanges, banks, everyone. We are trying our best that it becomes viable in case we can try to ensure that people are continuing the SIP for a couple of years.
Okay. And so the Mitra platform, how this platform will help investors and to whom you are targeting?
A lot of people who may have some units which are have been forgotten or have been untraceable, older units, I think they can go to this platform and can find out which mutual fund they have invested in, what is the status of their current investments. And I think this again is a part of the overall investor protection that SEBI and AMFI together have taken, along with our ecosystem partners like our RTS, KFintech and CAMS.
Okay, my colleague Anurag Shah also caught up with the LIC MF MD and CEO RK Jha, who lauds SEBI chairs of launching 3 landmark initiatives in the mutual fund space, which will pull and attract young investors to the capital market. Let's go across and listen into a slice of that chat as well.
I think these 3 initiatives are landmark, and they will be definitely a game changer. As we all know that inclusion, financial inclusion is an extremely important step. And the SEBI has taken the sachetization of SIP, which is a very, very important and critical thing. And presently we have only around 5.5 crore unique investors in mutual fund industry. This has to grow to minimum 25 crores, 50 crores. So this miniaturization of SIP, this pocket SIP, choti SIP will be a landmark and a game changer for the entire industry and for the financial system of the entire ecosystem. And it will help in bringing more and more individuals, young generation, the low earner people to join SIP bandwagon and take the benefit of wealth creation over a period of time. Okay. So this is the first thing. Secondly, as regards Tarun Yojana, it's an extremely important and step by the SEBI, because though we are conducting investor awareness programs, we feel that there is still a lot of gap in financialization of investment purposes or mutual funds which we propagate among the people, citizens of the country. So this Tarun Yojana will be an important landmark decision.
Mitra portal for the unclaimed or those who invested but unable to track it. So do you think it will help large number of investors?
Definitely. I have come from LIC also, and LIC also we find that there are in LIC also, since we have around 30 crore policy holders there also, we had to face lot of difficulties while settling filing claims because of not able to contact the claimants or the policyholders at the time of maturity of claims. So this is an extremely important step by mutual fund industry, by SEBI also.
Alright, then that's the word coming in from the LICMF management. But time now to slip into a very short break. More news and updates on the other side, so stay tuned. Welcome back. Thank you so much for staying tuned in. Well, time now to get you a list of stocks that you should be keeping on your radar bright and early this morning. In fact, Gaurav is standing by with just that list.
Well, yes, let's begin our list today with Bajaj Autos, because this company the board has now accorded in principle approval to invest funds up to 150 million euros in one of their subsidiaries, Bajaj Auto International. Other than that, Bharti Airtel is also going to be in focus, because this company's board's special committee has also approved acquiring up to 5% stake in Airtel Africa PLC. After that, Swiggy is also going to be in focus, because this company is also going to invest in one of its wholly owned subsidiaries funds up to 1,000 crore rupees, which will be used for working capital and at the same time other capital expenditures. Other than that, Lupin is going to be in focus today, because company has got establishment inspection report from USFDA for the company's manufacturing facility, where USFDA concluded its inspection in New Jersey, USA. Zydus Life is also going to be in focus, because this company has received final USFDA approval for ibuprofen and another tablet that they will be launching soon. Other than that, Ujjivan Small Finance Bank is also on the list today, and the reason being that company will be selling their NPA portfolio worth 364 crore rupees to asset restructuring company. Brigade Enterprises, on the other hand, is also going to be in focus, because company is going to invest around 1,500 crore rupees in Kerala. This will actually provide employment to up to 12,000 people according to the company in the next 5 years. Railtel is in focus today because of another order win. They have now received an order worth 288 crore rupees from East Central Railway. And lastly, there are some companies which will be in focus on the back of the Nifty rejig. So first, let's talk about BPCL and Britannia. They will be excluded from Nifty, and Geo Financial Services and Zomato will be included in Nifty. This will be effective from March 28, 2025, and that is the reason why we will be watching out on all these stocks in a day today.
Lots of stocks to watch out for. Like I mentioned earlier, this weekend has been anything but boring. Lots of news flow coming in globally as well as back home as well. From that note, let's also take it across to Ansh, who's standing by with what's expected to happen in the F&O universe today, what's important to watch out for. Ansh, most importantly, the levels that we need to be eyeing today, because the gap down open is what we are penciled in for today.
That's true, Snehi. So Nifty was consolidating for 8th consecutive session now, and seeing Nifty, GIFT Nifty and also US market, there are very high chances that yes, Nifty will break that key support of 22,700 to 800 mark on downside. Also, if we talk about index future, then we are seeing that open interest has gone down by around 8%, indicating long unwinding. So long unwinding has been happening in Feb contract, and short build-up has been happening in March contract. Talking about Nifty Bank, here also we are seeing that Nifty Bank has also been consolidating from last 7 to 8 sessions, forming that critical support base around 48,700 to 48,000 level. So even this level has very high potential to break today on the back of a GIFT Nifty and all the US indices as well. Also in index future, we are seeing that open interest has gone down by around 3%, indicating long unwinding. So similar story here. Also we are seeing long unwinding happening in Feb series and short build-up happening in March series. Now if we talk about index future positioning, then we are seeing that FII have sold some contract by around 700 contract, due to which the total long position has slipped below 15%. At the same time, retail traders have also actually removed their contract. They have cut their contract by around 8,000 contract, due to which the total long position has gone down from 70.7% directly to 68.9%, indicating both the parties are getting bearish in the market.
Okay, so lots to watch out for when it comes to the entire F&O space. But let's also go across and listen into a prominent voice over the course of last week that we interacted with, Manish Rukhani, on his outlook for where we are headed where the markets are headed going ahead. Let's go across and listen.
We have to get our earning expectations aligned. That if the return on equity of India Inc. by and large has been 15%, and that's typically been, the returns that the index has given over 20 years, 10 years, whatever. You can't be making 25, 30% compounded for 4 or 5 years and then not suffer some consequences of that. So I think that period of adjustment was very much required. I remember all of us from the markets were in this very famous now Jaipur Jamboree in December. And the mood was also quite unanimous over there that the markets have run far ahead of themselves. The best case would have been that if the markets had just gone sideways and allowed earnings to catch up with with valuations. However, markets have actually corrected downwards to start, giving people a chance to look at things that they may want to own for a longer term. And we say it very well that in bull markets, you rent stocks, and in bear markets, they return to their rightful owners. So bear markets actually for investors is probably a good thing, that stocks that you want to own for a longer duration of time, hopefully can now fall into your portfolio basket as well.
Manish, did you just call this a bear market? I know in technical parlance, we have entered into one for the small caps at least, but one was hoping that this was just a very, savage bull market correction at best.
No, the bull market uptrend, which is the structural long-term thing for 10, 15 years, I don't think I'm saying that is over. The country is still going to be growing in double digits in nominal terms. Earnings will still be growing in double digits in nominal terms. But if valuations, for example, on mid caps are still closer to 30 times than 20, and for the small caps are beyond 30 times, even today after this correction, you have to understand that these valuations are not sustainable.
Okay, that's the word coming in from market expert Manish Chakhani. But let's move on and talk about a stock that's going to be in focus in the back of a brokerage note, and that's Interglobe Aviation, which is Indigo. We have a note coming in from Citi this morning wherein they've maintained their buy rating but have hiked the target price by 100 rupees to 5,200 rupees per share now from 5,100 per share earlier. They've also opened a 90-day positive catalyst watch for this stock, indicating how bullish they are on this space, and the pickup in overall air traffic demand is significant. That's what they're saying. They've also seen improvement in PLFs, which is their capacity utilization in Q4 of FY25, which is usually known to be a seasonally weak quarter. They're also saying that a part of this increase in overall demand could be attributed to the increased traffic to major airports in Uttar Pradesh to cater to the Mahakumbh. So that's another positive that has worked out well for the company. And lastly, they also say that higher demand could manifest itself in terms of better yields in Q4 FY25 itself. So it's looking good for the company. Citi is very bullish. They've opened a 90-day positive catalyst watch, also continue to maintain their buy rating, hike the target price to 5,200 rupees per share now.
Alright, then with that, completely out of time on this edition of Market Cafe on ET Now. Stay tuned to the market up next.